Hey, what's up, traders? Trader Tim, eMiniMind.com, bringing you another Monday market analysis. Today, July 13th, 2015. We'll start with the ES and then go over to the Euro. Right now, we are awaiting to see if the opposing short, the 2095, will fail. We once again came down and touched lows, 1, 2, 3, now a fourth time, and had an immediate response rally to the upside. Granted, in the middle of this, we had this large body day last week, but for the most part, we've had a strong rally off these lows. Now, there hasn't been a whole lot of actionable points in here because if we go to, let's say, the 15-minute chart, while it looks like there's a lot of price action here, a lot of it occurred in the overnight session, where you can see here, for example, Friday, really the only 15-minute retracement was in the afternoon, going to highs on the close. Today, I'm going to go to an hourly chart. You can see how we're stuck in the first hour's range. We dipped above it ever so slightly, but for the most part, not a whole lot of range in the first hour. Just this little 8-point candle that we've had, and so the rest of the day we've been stuck inside that range. You can see the trending day lower back here on Thursday was really the only opportunity. Thursday and Wednesday taking us back down into the long. So be patient here. I'm going to go back to the daily chart. There will be opportunities presenting themselves, especially if we break the short. I would look for a long setup that the market trades higher, we pull back, and then whatever we pull back to would be where I'd be looking to take 15 minutes down to that level, get long at the 50, either on a 15-minute or a 512 tick chart. The 512 tick chart, the very small time frame, again, working really well in the summer months here, so continuing to look at the very short time frames and not really play a whole lot of the bigger 15-minute and dailies right now, just because we're moving sideways right in the middle of this range. I would not take a 50 in the middle. If we start to pull back here, I would not take the 50 of halfway back of this move. I would either look to get short at 2084s or get long at 2039s. And right now, 2039 long is looking like the play. So we'll see in the next day or two if we can break 2095s. The volatility did decrease a little bit. I'll pull up the VIX here in a second, and you can see that we did sell off, or we did pull back a little bit from those highs. There we go, volatility index, back down into the mid-teens. So if we can keep this down to low teens, I would look for the market to continue higher. If we look at the SPY real quick, a little bit of declining volume on this rally, but as you can see, the trend really is broken. There's not a whole lot of directional trade going on here over the 6-month time frame. The next thing I want to talk about is the euro, and in particularly, if I pull back a little bit, you'll notice how, so this is today's price action, you notice how we get these with the Heikin-Ashi candlesticks on my chart. You'll see a nice string of red and a nice string of green, but then you'll get these little periods in here where we have red, green, and the Heikin-Ashi candlestick is great for pointing out these areas of chop. So visually, it's easier to see, are we trending or are we range bound? The other thing I wanted to touch on is so this is about 7 o'clock Central Time. When the market breaks down, and I'm looking for, in this case, we're trending lower, I'm looking for the market to break lows and then to take the next short lower. And I want to see a break by more than a pip. And I want to see the Heikin-Ashis change color to give some magnitude. So whereas right back in here, we've got a couple green bars, a red bar, a couple more green bars, a red bar. I want to see it break lows first. So see how over here we did not break the prior swing low. So if we go to the 7 o'clock time frame, we have lows established, but then over here we only broke by a tick, and we never turned candles green. So rather than coming in here and taking a really tiny trade, relatively tiny 50% retracement, I want to see us break lows by 2 pips at least, and then turn into green candles to give us the short setup that we broke down again, but then we retested. So if you place your stop 2 pips outside of highs, that would outside of the 61.8, that would keep you in the trade when we do dip in like this, when we get a little bit of a move in our favor, but we didn't make it all the way down to the target. The market retested our entry and then sold off and made it to our target. And then you can take highs to lows again and trade the next setup down lower, and then we broke through the target and drifted lower. So taking the first 1 or 2 are usually the highest reward to risk. As we start to trade 3, 4, 5 setups later, we can tend to come, say, like all the way halfway back or trade further back. So when you're taking like these lower ones after they've traded, after we broke down here in the morning, now you're selling lows that are, well past the initial move, and that's when we can break and come back up a little bit higher. So that's just want to touch on how I'm looking at the euro again on the 512 tick chart. Basically, similarly, if not the same as I'm looking at the 512 tick chart on the ES. So watch out the ES here. Watch for a break of 2095s or a break of the swing low. But at this point, I'd look for us to break highs before we break lows. Not taking any 50s in between, just longs of 2039s and the 512 tick chart. So that's what I'll leave you with for today. I hope you all have a great week, and we'll talk to you soon.